Hello, everyone here. This is Chris Capre with Second Skies Trading and XTB. So welcome to the Trading the U.S. Election webinar. I'm really grateful to, be able to do this webinar right now because it's such a unique time period in trading. And with the election right here, this is one of the more unique elections I've seen in my lifetime. And that's going to create a lot of trading opportunities. And it's going to create, I think there's going to be a lot of different scenarios that you have to be prepared for. So we're going to be talking about the various scenarios in the markets right now, possibilities and how it's going to play out and how you can trade it and make money trading. So welcome to everyone. I know everybody's just signing in right now. And it says 28 waiting. I'm not seeing, it's weird that there's people waiting. It doesn't see anybody joining right now. Do you see, okay, there we go. There we go. Okay, good day to you, Yanni. And good that everybody's coming in. There was just a delay on YouTube there. So I want to thank XTB for hosting this. It's been great partying with them over the years. We've done several webinars with them. And this is probably one of the more, not only most unique years, but one of the most pivotal moments of this particular year and how things are going to play out. So we're going to get into that. So welcome to everyone coming in here. Let's kind of jump into this real quickly. So I'm just going to give a super brief bio by myself. This is where the presenter flexes about their trading experience. So I have been trading for 20 years now, 2 decades. I was a former broker on Wall Street. I've traded for a hedge fund. I've traded the 2000 dot-com bubble. I've traded the London terrorist bombing, which is a very sad event, but a very challenging event for us traders. 2008 great financial crisis, SMB intervention, and the February 20 starting coronavirus. So I've seen a lot, and this is definitely, I would say, top 3 to top 5, not only most challenging events, but most interesting events and opportunities for traders out there. So hello to you, Sasha, and hello to everyone that's joining now here. So, all right, so what I want to get in and just kind of some of the main points of where we are at right now and what's kind of really front and center in terms of the U.S. election. So first off, for those of you that are in the U.S., this is probably very obvious, but if you're not in the U.S., this is something that's, kind of very at the forefront of what's going on in the U.S. and in the markets right now. And this is one of the most divisive times in U.S. politics I've ever seen. I've been around for 4 decades in the U.S. And while there were differences, many, many years ago, even going back to George Bush, between Democrats and Republicans, there wasn't this much polarization and there wasn't this much divisiveness. And that is actually creating a lot of kind of unique scenarios and mechanisms for some really kind of poignant and strange outcomes in this particular election. And so, that I think alone is kind of setting the kind of, how could you say, undertow for this to be a very contested election, assuming that one person doesn't come out incredibly dominant, like total blowout on tomorrow's US election. If it's somewhat close on either side, then most likely you're looking at a contested election. And that's going to have even more consequences considering how, divided the country is between the left and the right now. So you throw on top of all of that, you throw the issues with coronavirus and how that's affecting the economy, how it's changing the economy. The economy has fundamentally changed in such a very serious way, some of that good and some of that bad. And so that is front and center in this particular election. Like, even if, we weren't divided politically and it wasn't going to be a contested election, that issue alone is making this one of the most unique elections of my lifetime. On top of it, you throw in a potential tech bubble. Tech has been super hot. It was what led us out of, the bearish markets and the big sell-off. And it's been pulling back as of late. And there's kind of some evidence that we are entering or have really started. The tech bubble has been popped. All bubbles eventually get popped. And it's just a matter of when and how. And it's possible that we saw the top in the tech bubble in September this year. And so that's playing into the stock market and potential setups. And then on top of it, there's a lot of unique things going on in terms of the options market right now, in terms of how it's positioning. And there's a lot of really interesting option trades going on in the markets that's reflective of the tech bubble, of what's going on in the markets as a whole. So a lot of, kind of unique factors are coming together to make a really, volatile situation. And if you're not smart And if you're not experiencing this, then you might find this a really challenging situation tomorrow. It could blow off and be super easy, and it might just be like such a blowout, and it's such a, like decisive election that things get to move on. But every direction I look, there is potential for massive movements in the markets and a lot of volatility, and you have to be prepared for that. And that's what this webinar is about. So hello to you, Drazen. Good to see you here, and good to see all the members joining in. All right, so jumping into this, talking about the divisive view of politics. So as I've mentioned, how is this kind of playing into this contested election scenario that I kind of mentioned? Well, there is a lot, because of COVID, we are in a situation where it's much harder to vote in person, and the risk to vote in person is much greater. If you think about what it is, I don't know what it is in other countries, but in the US, a lot of voting is done at polling locations and where you can vote directly. And you're going to be touching a lot of things and papers and pens and screens and things like that. So the chance for, COVID breakouts to happen at a particular polling station or voting station is very, very high. And so, that situation has created scenarios where a lot of people don't want to vote in person and they want to mail in their ballots. And that mailing in the ballots is going to delay the process in terms of who wins and who doesn't on a state-by-state basis. And I don't know if you're from the US, but if you're not, each state has individual regulations as to how those mail-in ballots can be cast. So we've already seen a lot of legal contests happening from both Democrats and Republicans saying like, no, we can't count them after the election. And some states are saying, yes, that's okay. That's part of the normal process. A lot of votes are counted after the election. Are they being mailed in? Are they early voting? Because this is so divisive, and because also both sides are what I would say very triggered, you are creating a lot of kind of fervor and kind of energy and verve for people to vote very intensely. And just to give you an idea of how divisive the US politics are, Joe Biden tried to do an event in Texas. Trump supporters found the bus on the highway, got a bunch of Trump trucks, surrounded the bus, and almost drove it off the road and knocked other cars off the road for following the bus and trying to stop the rally. That's never happened in US history before, where a presidential candidate was driven out of a state by the opposing side's forces. You've actually had situations in my city, where I actually live in a very small city in the country, which has been relatively quiet, where one side was actually, a bunch of guys were actually caught beating up girls because they had different political views. And so it's just created a lot of tension, and that tension is kind of reaching a boiling point. And so this election is really this nexus of all these events coming together. And so with this divisive view of politics, you're creating a lot of potential volatility in the US. So I believe that the most likely scenario is going to be a contested election. There are certain scenarios we're going to go over where it's possible that it'll be very smooth because it'll be so dominant on the left or the right. And so, but I'm leaning more towards that the higher probability event is towards a contested election, that it won't be fully decided tomorrow. And the longer it becomes contested, the more court challenges can happen, the longer it takes to count the votes. There might be a problem with votes. If you were in the US, the whole Bush v. Gore situation almost 2 decades ago, that took weeks. It had to go to the Supreme Court for it to be decided. The difference is that this time it's much more polarized, and there's much more extremism in the US than I've ever seen. So the longer it gets contested, the more that kind of extremism and volatility could play itself out in the markets. But this is, to me, the more probable scenario. If I had to bet which is a more likely scenario, I would bet that it's more likely that the election is not going to be decided tomorrow, that it could take anywhere from 1 week to a month before we have the decided winner, depending upon how close it is. And just think about what that would do to markets and traders' positions. If you have some very big positions online, what are your chances that you're going to want to hold them through a contested election? Those numbers go down, and that's going to create a lot of hedging. That's going to create a lot of protection plays, uncertainty, trading volatility, trading risk off. So if you start to think about this, this should start to put in your mind that there's a potential for a lot of situations to happen in terms of the markets. And then you throw in the coronavirus and how it's affecting the economy. I think this is the most primary issue, but there are other issues going on. But bottom line, I don't know what it is in your country, but in my country here, I believe the most dominant issue is How are we managing the coronavirus? How are we going to solve this problem? And how is it affecting the economy, with millions of people out of jobs and, losing tons of jobs and some jobs not coming back and then new jobs being created. This is the most dominant issue right now. And that's creating also a lot of uncertainty and risk. So tech bubble, I've talked about this. I'd like to get into a little bit more in this as we start to look in the different scenarios. But anytime I see these kind of magazines of like Time Magazine or Barron's or something like that coming out saying, hey, we're not at the top yet, that often kind of signals and has signaled in the past that the market actually is, possibly turning over. There were many times when we had the dot-com bubble where certain magazines, big magazines that aren't really involved in stocks or stock trading came out and said, hey, the market's going to keep going. We're going to 20,000, 50,000, 100,000. And then shortly after that called the top. And so this was kind of a very interesting sign for me that we're already starting to see a sell-off in tech. And then Barron's comes out and says, yeah, we're not there yet. That to me is a little bit of a worrisome sign. Heavy options positioning. For those of you who've been trading options, you'll notice that there's been a lot of moves, particularly in VIX. I have been very big in option plays in VIX. I've been trading VIX. I've been recommending and saying, hey, VIX is going to pop at least leading into the election and probably through the first few weeks. So I've taken options positions specifically in that. But when you look at what's going on with the options market, it's creating, it's kind of communicating what's going on from a flow-based perspective, and a sentiment-based perspective with some of the larger players, how they are preparing for volatility. And it's expressing itself mostly in VIX options right now. So these are the 4 scenarios. I'd like to get into these scenarios right here and how they may play itself out, and then potential trade ideas. And, once we go through this, if you have some questions, about particular trade ideas, I will go over specific trade ideas. Let me go through that first, and then we can kind of have an open Q&A towards the end of this here. So scenario 1, it's, I'm not putting this in any order of probability I think it's going to happen. I'm just talking about the 4 different scenarios. So scenario 1 is Biden wins. That's the Democratic side, and that the Democrats are able to retake control of the Senate. Most likely, they're going to retain control of the House, which they have. If they take control of the Senate, then that means that the Democrats will not only have the presidency, but they'll have the House and the Senate. And that will create a lot of opportunities for them to pass legislation, coronavirus relief packages, potential infrastructure packages. That creates it reduces the obstacles for them to pass a lot of the laws and legislation that they want to. So that is one potential scenario. And that creates a very interesting trading opportunity, kind of future and horizon for us traders. One of the more possible scenarios is that Biden wins, but then the Republicans maintain control of the Senate. And if the Dems have the House and the Republicans have the Senate and Biden's in the presidency, the Republicans in the Senate most likely are going to go obstructionist. That means that if Biden wants to pass a stimulus bill, or he wants to pass some infrastructure bills, or he wants to do certain things, if the Republicans think it will benefit them by blocking it, by making it look like he can't pass anything as a president, then they most likely will do that. There may be a stimulus package out there, but beyond that, it's going to be very hard for Biden to get necessary legislation through the House and the Senate to be able to get that to the people in the country. So that creates a very kind of contested obstructionist type scenario. And that is certainly a possibility. On the other side of the coin, if Trump wins and yet the Democrats take the Senate, then that's kind of the inverse situation, that the Democrats will have control of the House and the Senate. But with Trump as president, he'll try and pass stuff and he won't be able to get them through the House or the Senate. He might be able to get a relief package because that is in the best interest of all people to get that passed. But the Democrats are going to have a lot more bargaining chips if they have the House and the Senate to be like, nah, we're not passing that. That looks really good for you. We want to pass this. This is what is good for us and our people. And so that will again create kind of this obstructionist type scenario where the flow of legislation will not be top down, but will have to go through several layers, and it will get changed as it goes through the House and the Senate. And that's again kind of this obstructionist, very contested type scenario. The fourth situation is that Trump wins and the Republicans maintain the Senate. And that's kind of like the first scenario that I talked about with the Democrats winning the election and the Senate as well. That means that Trump can pretty much pass what he wants. He's probably not going to get a whole lot of interference from Republicans. And they'll be thinking, hey, we want to pass as much as possible and fix this situation, because if they do a really good job fixing this and fixing the economy, that will set them up for the next Senate elections going on 2 years or 4 years down the line, and they'll set them up for the next election, the next presidential election down the line. So there's a lot of interesting scenarios, and where it all falls will determine what will be the best trades and what will be the worst trades. Does that make sense to everyone? Yes, no? Hello to you, Neil. I know there's a 15-second delay here with YouTube, so I'll let the questions slowly flow in. But it's important that you understand and just start to think in your head and like, okay, if this scenario happens, how would that affect trades and legislation in the US dollar going forward, gold, Bitcoin, all kinds of things like that, based upon each type of scenario. We're going to get into that, but just start to think in your mind how that may impact the trades and the markets as a whole. So looking at these different scenarios, if we look at the first situation where Biden wins the presidency and they take the Senate, so they have control of the House and the Senate, I call this the elevation scenario. And so what is most likely going to happen from that? You're going to see a COVID relief package passed pretty quickly. And there's a good chance you're going to see an infrastructure bill. And I've been talking about this for months, since February, March, that if you've lost a lot of jobs, I don't know what it is in whatever country you are, but almost every country across the board has lost a large amount of jobs. And some of those jobs just aren't coming back. Airline jobs are not coming back. Service sector jobs are not coming back. Hotel jobs are not coming back. So how do you replace the jobs that are lost? You create new jobs. And what's one of the best ways to do that, to kickstart your economy? You invest in infrastructure. Because if you invest in infrastructure in your entire country, then you're going to be creating all kinds of new opportunities. And if that infrastructure is geared towards new green tech, well, then you can transition out of old energy, oil, gas, coal, and move into new energy tech. And that will create a situation where you're creating new jobs, new trading opportunities, and therefore new investments, if you think about it. So in this situation, where I believe the most likely scenario that the winners are going to be ESG, which stands for energy, sustainability, and green tech, I think that's a very high probability that Biden will start to move. He said, I'm going to transition away from oil. So finally, some sort of presidential candidate saying, hey, look, we're not just going to focus on right now. We're going to actually focus on building for the future, because that's where the future is going. The future is going towards green new tech. Eventually, oil, gas, and coal, those things will be less sustainable, and we'll have to move away from that, have to transition to, they have a limited time horizon, and it's time for a new future, in my opinion. And so with that being said, Biden's kind of hinted that he's going to move in that direction. And so ESG investments will do really, really well. ESG companies will do really, really well. On top of it, some of the millennials that have really entered the market, because of Robinhood and things like that, they are much more geared toward ESG type companies. They're investing heavily in them. Volumes before the coronavirus for these ESG companies and after coronavirus are not even comparable. You're seeing companies that had very little volume until the coronavirus hit. And then all of a sudden, a bunch of people started to become day traders with their stimulus checks through Robinhood. And where they've been investing most, all these millennials, in ESG type investments. Now, another benefit of that is silver. Silver is a metal that's actually very much needed for a lot of this ESG technologies. And so I think silver is set up along with a lot of commodities for a really good rally in the near future. And I think silver is going to be well positioned for that if we start to move in that direction. 5G technologies, that would be part of new infrastructure, and also new industry. So you're talking more advanced industry, robotics. You start looking at driverless tech for cars, basically, not just Tesla, Neo, and things like that, but other companies like Waymo and all these other companies that are building the cameras, building the sensors, building the radar or the LiDAR, whatever tech that is. If Biden wins, it looks like everything's going to move towards a new industry, new tech. And so I think those are going to be the big winners. I think the losers in this scenario would actually be Google, to some degree, Facebook, Twitter, some of the big tech right now. Amazon, I think, is very well positioned, that unless there's a DOJ antitrust suit that Biden brings, I think they're going to be well positioned to weather a lot of this. But I think a lot of big tech is in trouble because there's a lot of lawsuits that they're facing right now. And there might be enough political capital and will that even if the Democrats get elected, that they will still pursue this because some of these big tech companies have way too much power, in my opinion. I think media is actually going to suffer. Most media companies are actually doing really well under Trump. New York Times stock is up like several 100% since then. It was only up like 4% for like the prior few years before Trump. Trump, whether you like him or hate him, he's very polarizing, and that creates a lot of newsworthy, not news necessarily newsworthy, but kind of news flashy type headlines. If they engage you or they enrage you, you're more likely to click on that. And so media companies, I think, are going to lose big time if Biden gets elected, because granted, he may be a better president for the country. That's depending upon your opinion, but he's definitely not as polarizing as Trump is. And so I think media companies, I think that would be a big sell if Biden wins. Also, legacy health. So why legacy health plans? First off, one of the industries that's most ripe for disruption is health insurance in the US. In other countries, y'all have figured out how to actually get health insurance to everybody. In the US, there's the potential for it, but there's so much lobbying on the health companies, in my opinion, that it makes it really hard to get the politicians to actually want to pass that legislation. And so there's a lot of movement towards new health companies like Livongo, and many other health companies are kind of starting up that are trying to change the health insurance industry. I think that's going to be a part of this new tech, new infrastructure, type wave that would be happening under a Biden presidency with a Democratic Senate. So that's kind of some of the winners and losers on this one here. If we go into a deflation scenario, which is Biden wins, but the Republicans come in and say, hey, we're going to block, they take the Senate, we're going to block everything that you try and pass to make you look as inept as possible. Well, then you're creating a gridlock situation. And if we needed a lot of stimulus to inflate the economy, well, then that's going to be hard if you can't pass any stimulus to inflate the economy. So you're going to see deflation. And so, we put 2.2 trillion out there the first time around. If we can't get another bill passed by December or January or February, you're going to see a massive deflationary surge because there's no money pumping into the markets. And so that's going to create a gridlock situation. And the winners from that is you're going to see higher volatility. So I think VIX will be very dominant if that happens. I think gold is going to be a big beneficiary of that because they're going to lose confidence in the US dollar. I think Bitcoin also will benefit from that because, again, people start to lose confidence in the US as a country, its infrastructure, its policies. And I also think that you're going to create a lot more economic strife and kind of dislocation in the US policy and markets. And I think that's going to actually be good for gun manufacturers. Right now, gun manufacturers are seeing record numbers of guns bought in the US. We have more guns in the US than we actually have people. For those of you in Europe, that might be a crazy scenario, but in the US, that's a reality. And now that there's more polarization and there's more social unrest, what do people look towards to defend themselves? They look for stuff like guns to protect themselves. So I think gun manufacturers will do really, really well in this situation. I think the losers in this case will be the US dollar. I think if that happens, the US dollar will lose big time. Third scenario is kind of the inverse of this. Trump wins, but the Democrats take control of the Senate. And it only takes 2 or 3 states for the Democrats to flip it for them to take control of the Senate. Like there's like a 2 or 3 person difference right now. If the Democrats can pull off 2 or 3 state upset, they will take control of the Senate. So if that happens, then you're going to see kind of instead of a deflationary type scenario, you're going to see some sort of stagnation. They will probably pass some sort of COVID relief bill. It's in the Democrats' best interest to do that, but they're not going to pass a whole lot after that. And so if you think about that, if Trump is pro oil, gas, coal, well, then they're going to benefit. Yet the uncertainty around the US is still going to create this bullish gold scenario, bullish Bitcoin scenario, particularly versus the US dollar. And again, there'll still be a lot of social unrest and a lot of political divisiveness. And that will also create good things for gun manufacturers as a whole. I think in this case, Trump is not really focused on EV tech. He doesn't talk about it. He doesn't talk about electric vehicles. He doesn't talk about green energy or something like that. He sounds very anti-green tech. He sounds very more legacy, old type tech. And so I think the losers in this is EV companies will have a slower opportunity trying to grow. They'll continue to grow, but it'll be less because they won't have the wind in the sails from, say, a full blue wave taking over the presidency and the Senate and the House. So I think new industrials will lose, and I think EV will be the losers on that one. The last one is Trump wins and they keep the Senate and the House. Now we have much more industry relevant scenarios. So I think in this case, I think you're going to see bonds do really well because there'll be a stability in the US. They'll be able to pass legislation. They'll have very little obstacles in terms of what they want to do. I think the S&P 500 would be a very good play under this scenario. I think under also a Biden scenario, the S&P 500 will do well, but I think that it'll do really well under a Trump scenario because of the fact that he's very pro stock market. Like he seems to think that by having a stock market go up and up and up, that it really says something about him as a president. Interesting take on that, which is that in the US, 10% of the people own 84% of all the stocks. So if you were to visualize what that means if you're in a room of 100 people and you have 100 stocks available, 10 people own 84 of the stocks, and the other 86 people only own 16 stocks amongst all of them. The stock market is not the US economy. Most people in the US do not own stocks. And so the fact that he thinks the stock market is a measure of the US economy is very kind of twisted and distorted. He also talks about, oh, I've created the best stock market in history. Well, guess what? The stock market generally goes up as a whole. 4 or 5 of the other presidents before you had created the best stock market in history, a stock market better than what they were given and the highest in history. Obama did that. He had the highest stock market in history. Bush had that. Clinton had that. So having the best stock market in history is not any special achievement because every president for generations has been able to do that. I also think some of the winners in this kind of scenario are going to be banks. Banks, I think, are going to be, while I think the profitability of banks is going to decline in the near future because capital is moving away from banks. Bank stocks have really suffered in this, year. That Trump is very pro-bank, very pro-Wall Street. And so I think you'll start to see a lot of capital flow back into banks if this were a scenario to happen. I think in this scenario, I think gold loses and I think Bitcoin loses because the US will have some semblance of stableness in terms of policy and direction. So these are the scenarios that are playing themselves out. I personally think any sort of deep market drop after the election is decided, like once the election is decided, I think wherever the market is, if it's dropped a lot at that point, I think that creates buying opportunities. But as long as there's a contested election, I think we should be long volatility and short risk. And once the election is decided, then I think we need to flip that to be short volatility and long risk. So those are kind of the main scenarios that I see playing themselves out. With that being said, I think it's time to look at different opportunities in stock markets, where I see things going, where would they have to go for me to want to trade them, and what are some of the trades that I'm involved in right now. Before we do that, does anybody have any questions that they'd like to ask before we move on to the next section? Any questions on those different scenarios? Any questions on, how I've visualized all that? Where do I see the markets playing themselves out? What do I see as the more likely scenario? Any questions on any of that before we move on to the next section? And while you're at it, who here thinks Biden is going to win? Who here thinks Trump's going to win? That's a very interesting question. I'm curious where everybody's going to vote on this one. I know we have a lot of people from other countries, maybe don't care as much, but I am curious to where y'all see this playing itself out. So who here thinks Trump's going to win, and who here thinks Biden is going to win? And how many people are from the US? I'm just curious how many US. I know it's like working time for the US, so it's probably not a whole lot of people from the US, probably a lot more Europeans. It's more your afternoon, evening time, maybe some people from Asia that are staying up late. But how many people are from the US, and where do y'all see this election heading? Feel free to let me know in the comments. No questions? Really? Really? Are you guys one of those crowds that just kind of sit back and just let me do all the work and don't engage at all? Because if you are, this is going to be a shorter webinar. That's less time to look over opportunities. It's less time to look over charts. Lewis is saying, I expect Trump, but both are awful candidates. Yeah, I hear you on that. That's an understandable position. I hear you on that. Yanni's saying, I don't know who wins, but I hope Trump does not win. Gotcha on that. Yanni's representing Finland here. Saba Salim is saying Dubai base. Gotcha. That's probably what, late afternoon, evening your time in Dubai? Probably do. Drazen Gara saying, what do you think? Where will tech stock move? Are you talking about, Drazen, are you talking about the QQQ, like the NASDAQ? Or are you saying, or do you have a specific tech stock you're looking at? So let me know so I can understand that. Sophia, good to see you. She's one of our members. I'm from the US. I think Biden is going to win. I hear you on that. I'm leaning towards Biden winning. I definitely think, I think it's less likely there's going to be a blowout scenario. I think it's going to be contested for sure. So, but I'm leaning more towards Biden. I think there's a slight edge to Biden right now. There was an interesting video I saw yesterday around this whole thing. There was a US presidential scholar who said he's correctly predicted the election winners since 1984. So you're talking, what is that? It's 16 plus 20, 36. So you're talking 9 elections. He's predicted the last 9 elections perfectly, 9 out of 9, which is pretty impressive. Some of them weren't that hard to predict because they were pretty dominant. Like, it was pretty likely that Clinton was going to win re-election. It was pretty likely that Obama was going to re-election, but there were some other ones that were pretty challenging. And so he actually predicted that Trump would lose. And he has all these points of that, you know, if the president has this many strikes against, like the incumbent has this many strikes against them, they won't win. And normally they would need 7 strikes against them to lose the election. And Trump has 7 of them. And a lot of it had to do with COVID and the economy. So he actually predicted that Trump would lose the election. I still think Trump has a very good chance. I don't think you should count him out. I think it's going to be very close, but that's what he was saying. Damon Oldacre saying UK based. I think Biden will win, but I agree. I think there could be better candidates. Trust me, I think a lot of Americans agree with you that there could be better candidates right now, for sure. Like somebody from another country said, you know, they're like, hey, bro, you know, you have 300 plus million people and the best you could get was 2 like really old white guys. Like, you got to work on this, you know, and I totally agree with him. So Peter's saying, I think Biden is going to win. Gotcha. Drazagar is saying, I mean, Apple stocks. Okay. Okay. Gotcha. So it looks like people are leaning towards Biden. Some people think Trump's going to win. And everybody seems to agree there could be better candidates. Yeah, I have to agree with you on that one. Okay, so Apple. Let's take a look at Apple. Actually, before we get into Apple, let me get into Drazen. Let me do SPY, so S&P 500. Let me do QQQs, what's going on with that, which is the ETF for the NASDAQ. And then we will get into Apple on that one there. So starting with the S&P 500, this is the SPY. It's the ETF for the S&P 500. While the SPY has had a very good ferocious comeback, it barely made new highs before it stalled on the weekly chart, and it's created this. Let's get rid of this for now so we go full chart. It's created this corrective structure, and it's very interesting because instead of creating it at the top of the prior move and using this as like a floor to launch higher, it broke above it for a couple weeks, but then it got right back in it, and it even rejected at it, got above it again and inside there. So we're at a corrective structure that's half above, half below a prior all-time high. That's not, I wouldn't say that's common. I would say in this situation, it's more uncommon to some degree. That means that the market is not feeling like it's not using the prior all-time highs as a floor to go higher, nor is it using it as a resistance to hold things down. So with the S&P 500, if it were to lose the bottom of this corrective structure, say 319, then that's going to create a further unwinding. Anybody who's long on a shorter medium-term perspective probably has their stops below here. So if this were to get tripped, then that would open up a lot more downside, probably to about 301, mid 301s. So, sorry, just shutting off the phone. I have no idea how I got that call. So it's kind of in a weak position. It's not in a position of massive strength. It's got some strength to it. We're at a corrective structure at the top of a move. That is a sign of some strength. But again, it's not respecting the prior highs as a support or resistance. So it's kind of a mixed bag, and there's definitely been some pairing of positions on the long side. It hasn't been able to make a new high since the highs in September or end of August. So that is a very interesting scenario, and it's lost 3 of the last weeks in a row. And if this week ends up bearish, then that'd be 4 weeks down. That'd be the first time since the sell-off that we've had 4 weeks bearish. And I don't know, what would that be? So 358 down to 318. So it's already down roughly 40 points. It's not quite a bear market. We're about 12, 14, 15%, but it's up there. If we were to get to 300, then we'd be in a bear market. So S&P, just to kind of get an idea of where S&P is right now. Now, when we look at QQQs, which is the ETF for the S&P 5 or for the NASDAQ, this is very different. Prior all-time highs just blew right past it. So we have a lot of layers of support, including the prior all-time highs below it. What's also interesting with tech is that not only was it not able to make a new high, but it made a lower high, and same thing S&P, it's been rolling over. Each one of these candles, if you look at them, is bigger than the next. So that means that there was a failure to recover these highs. Bulls took some profits. We saw more aggressive selling, and then this week we saw even more aggressive selling. And it didn't use this prior high as a floor to bounce from. So the next place for tech as a whole, I think, is 261. We are bearish QQQs right now. We've been bearish since this little top here. We shared these trade ideas with our trader members. We started selling QQQs via options, via direct plays, and that's been playing out very, very well. I think Qs and tech as a whole, keep in mind, tech was the biggest beneficiary from the bottom in the coronavirus. So how many people here know, and we've talked about this in Second Skies, but how many people know what part of the reason, or one of the largest reasons why tech specifically was the one index that totally blew through the all-time highs and made significant new highs? So does anybody know? I've talked about this scenario. Meanwhile, Peter has a question. What's the best scenario for Bitcoin in your opinion? Biden plus recurring center, or the opposite? We'll get into that, Peter, in just a second here. Yeah, I think there's 2 really good scenarios, maybe even 3 scenarios where Bitcoin could do really well. So yeah, we'll get into that in just a second. Let me finish this kind of tech discussion. After this, we'll look at Apple, and then we'll take a look at that situation. Lewis, there you go. The NASDAQ whale. Does anybody here know about the NASDAQ whale without Googling it right now? What that was all about? Besides my members who heard it from me who are cheating? So who here knows what the NASDAQ whale situation was about? Non-members, see if you all answer this question. Okay, it doesn't seem like many. All right, so what happened was during this part of the sell-off, everybody was kind of liquidating. You know, people were liquidating all kinds of positions. They were liquidating positions that they were losing money on. They were liquidating positions that they were profitable on to cover some of their losses. Hedge funds were liquidating. Major stock investors were liquidating. Warren Buffett was pretty much out of the market at that time. Very different than 2008, where he got back into the markets to bolster it. There was a lot of traders who were out of the markets. SoftBank, spotting an opportunities through one of their senior traders, who was an engineer, he has like PhD in mathematics and engineering, and used to work for Deutsche Bank, realized that there's a lot of low liquidity in the markets and that there's a potential buying opportunity, particularly through options. So what had happened is that, for those of you who don't know how options work, if I was to buy a lot of calls are bullish option plays on the market. And so if I buy a call, that means I'm very long bullish on the market. The way the options market works is that if I buy a bunch of calls, like thousands and thousands of calls from a dealer or a broker doesn't want to have risk on their table. So if they sell those calls to that person who wants to buy all those calls, well, then they have upside exposure to the market. If the market goes up, they're in a bad position. So how would a brokerage offset the risk from the market going up via the calls that they sold? How would they offset the risk? Anybody have any ideas on that one? It's a tough question if you're not an options trader. So if I had to sell a bunch of contracts, to think about it this way, if I'm a company that provides fire insurance and I started selling a lot of fire insurance plans, and all of a sudden things get really hot in California, and there's some high winds coming in, and there's potential for a fire or something like that to come, what would be one of the best things to do for me would be to either sell the fire, like get rid of the fire insurance that I have, since I sold a lot of policies, or I can buy protection against that fire insurance that I sold. Well, that's what a lot of dealers were doing. SoftBank came in with their trading department. They bought a lot of calls. They were very long the tech market. The dealers who sold those calls to them were now exposed to upside risk. So what did they do to protect against that risk? They started buying the stocks directly, because if they have bought the stocks and the market goes up, that neutralizes the risk. They don't have to worry about losing money in the calls because they own the stocks. So SoftBank comes in, buys these very illiquid options, deep out of the money calls, a lot of them, and it forces the brokers to get long. So now all of a sudden the brokers are helping SoftBank in their NASDAQ positions, their tech positions, lift the market. Then on top of it, in the way the US options work is that if a dealer sells so many calls to a particular market, they are forced to buy a certain amount of stock to cover that position. So now they're put in a double position where they have to be long the stock in a very serious way. So SoftBank comes in, buys a lot of tech, a lot of NASDAQ. Then the brokers are forced to join that party, and it just became this self-fulfilling cycle, this kind of virtuous cycle. Keep in mind, the hedge funds didn't get involved in the market until May. They stay out of it until May, and then they're like, yeah, we missed a lot of this rally. We're going to start buying dips. So then May comes along, the market's already lifted a lot. May comes along and hedge funds are just buying all these dips. So you had a lot of people getting long tech. SoftBank was the NASDAQ whale. That's the reason why the NASDAQ versus the S&P 500 or any other index was the one that had the biggest gains on the year from the coronavirus bottom. They unwound a lot of their position in August. And since then, NASDAQ hasn't been able to retain those highs. Neither has Apple. And so I think tech's in a lot of trouble right now. I think if the NASDAQ or the QQQs lose 260, then you got 250, and then you got 240. That's a lot of downside. Like if it was to lose this corrective structure, you better believe there are traders who bought this dip that still have their stop just below this. So if this gets stopped out, then they're just going to fuel the downside even more. And so then you have to look at the next support and the next support down before buyers will want to get back in. So tech is in a very vulnerable space, in my opinion. And if you look at even just a lot of the intraday rallies on tech, let's take a look at the 1 hour. Let me delete this corrective structure so you don't have all yellow. But what do look at this is the 1 hour chart. We sold QQQs right around here. Hasn't come back. We sold it again, we sold it again, and we sold it again. And look at every single rally. Sold, corrective structure, sold, rally, sold, rally, sold, rally, sold, rally, sold. So tech is in a very, very weak space, in my opinion. It hasn't really shown any sort of real transition on the 1 hour or the 4 hour or the weekly chart yet that this sell-off is over. There's, some mild points. But if you look at all the data points from a technical perspective, there's very little to show that this tech rally this sell-off is over. So I suspect there's still more bearish pressure in tech. And Twitter's got DOJ lawsuits, Google's facing them, Amazon might be in the future, Facebook, there's all kinds of potential lawsuits, potential antitrust issues going on. That's just going to overhang on investors' minds, serious investors' minds, that, hey, do I want to invest in a company that it could be facing a potential major lawsuit, maybe even a breakup? If if some of these companies faced antitrust lawsuits and lose, they're going to be broken up. So even though that could be a really good thing long term, that's going to put pressure on tech. And you're seeing it, certain stocks that did really, really well. A lot of people talk about like, oh, Tesla was amazing, it did so great. Man, anybody who knows Overstock crushed Tesla in terms of performance. Overstock at the bottom of the coronavirus hit mid twos. It shot up to 128. It's about a 60 times return. Tesla had what, a 400% or 500% return? This had a 6,000% return. And look, since the sell-off, hasn't come back. And you're seeing that in a lot of tech companies. So for you, Drazen, getting to Apple, it's in a very, very similar position. Here's your next support. I think beyond that, I think there's a decent base around 92. But then after that, you have to look at prior all-time highs. This is obviously post-split. Prior all-time highs are on 82. And again, what are you seeing? Much lower high. It didn't even make, the NASDAQ made closer to the prior highs, S&P closer to the prior highs. Apple is maybe 40% from the all-time highs. That's a much more significant lower high. And if you look at each one of these weekly candles, pin bar rejection, strong selling, stronger selling. And it's already pressing the lows of last week, and we're at Monday. So if tech continues to sell off, then you're looking at 107 or 103.52 as the next potential support. If that breaks, then I think you might have some stoppage at 100, but beyond that, then I think you're looking at mid 92s and then high 81s before there's any support. I think Apple is kind of in a challenging position. Keep in mind, Apple has, a huge market in China. There's a lot of tensions between US and China. Their new phones, are not really doing that well. A lot of people don't have a whole lot of money right now. So why buy $1,000 phone in the US when you got to put food on your table? I just think Apple's in a very challenging situation right now. Don't get me wrong. They're a strong company. They got a lot going on long term, but I think they have their challenges short term. So I wouldn't want to be long. If I did, I'd want to wait for pullbacks, and I'd watch each one of these levels very, very carefully. So does that answer your question there, Drazen? Hopefully. Okay. Let's looking at Peter had a couple questions. What's the best scenario for Bitcoin, in my opinion? I think there are 2 to 3 scenarios that would be really good for Bitcoin. And let's pull up. Let's go with Coinbase. So I think the first scenario that's really good for Bitcoin, I think the top 2 scenarios, and let's go to weekly. I think the top 2 scenarios, not at looking at even the current technicals, we'll get into the current technicals shortly, but I think one really good scenario for Bitcoin is Biden wins the election, but the Republicans maintain control of the Senate. That will create a lot of gridlock. It'll create a lot of difficulty in the country moving forward with policy, with legislation. And that's going to create a situation that there's going to be a lot of instability in the US, deflationary type situations, and kind of this overall consensus that there'll be less faith in the US dollar because we're not really getting stuff done. We're not fixing the situation. So I think that is very positive for Bitcoin. I think it's also very positive for gold. I think you take the inverse of that situation, which is that Trump wins, but the Democrats take control of the Senate. That creates a very, very similar scenario. It creates this gridlock obstructionist type scenario. And if that happens, I also think you could have very similar scenarios play themselves out, and that would create this environment which would be very anti-US dollar, anti-US. People wouldn't feel confident investing in US when there's just not a whole lot of policy moving things forward, not a lot of relief, not a lot of situations getting done. There's very little progress in the US in that situation. I also think that if we have a very heavily contested election that goes on for weeks, like tomorrow comes out, it's super close, maybe one candidate's in the lead, but we still got a lot of mail-in ballots that are being counted, and then the lead flips, and then there's lawsuits, or maybe Biden's in the lead, but then Trump starts to sue, or Trump's in the lead, but then Biden, mail-in ballots come in very favorable to Biden, and then Trump starts to create situations. If there's a lot of legal situations, you could see a lot of cases going to the Supreme Court, the state Supreme Courts, or the US Supreme Court. As long as that stays contested, then I think that will be very bad for the US dollar, good for gold, good for Bitcoin. So I think any one of those three scenarios could be very, very good for Bitcoin. I personally like being long Bitcoin into this volatility. In terms of so looking at the overall structure, we have obviously a major structural high here at roughly 14K. We've had a pretty impressive run off these kind of exhaustion lows. And so if you look at this, this is a pretty impressive bounce. 1, 2, 3, 4, 5, 6, 7, 9. So 8 out of 9 weeks bullish. That's very, very strong buying. After such a strong candle, that usually means there's exhaustion. And this was kind of this exhaustion type selling. And once it was done, people started buying Bitcoin heavily. It's maintained above the 20 EMA since then. So you have an impulsive bounce, corrective structure here. Another impulsive bounce goes to the prior highs. So this was the prior high in the swing move. It now becomes a floor. That's what we call an RRL, or roll reversal level. That's a very good technical structure saying, hey, look, what was a ceiling is now a floor to launch higher. So it did that, held at the 20 EMA, and since then, 1, 2, 3, 4, 5, 6, 7, 8, 9, 7 out of 9 weeks have been bullish. So we have what I think is a good short to medium term base. I would say it's a medium term base at 10,085. Resistance, 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 support. So I think you got a good medium term base in there. And if you start to look at the longer term base, I think if Bitcoin somehow does get down to 7,200, I think that's a tremendous buying opportunity long term. But low here, higher low, higher low, higher low. That's all very favorable since January 19. The highs are staying the same and the lows are continuing to build. The lows have been building since here. So this was a higher low, then we have a lower low. So from here, from March this year on, pretty much, when the bottom happened in the markets from the coronavirus, Bitcoin has been rallying. And so the highs have continued to build. So that to me tells me that things are continuing to build this higher base for Bitcoin for a potential another rally. I wouldn't want to trade any sort of breakout that happens right now unless the breakout happens on a very contested election. But just this general structure, I would rather take a dip on this one than trade the next breakout. Like if the market just goes boop and breaks out, I would rather wait for a dip or a pullback to this level and treat it as support before getting long. But I would not want to trade a pure breakout on Bitcoin. That's just not my favorite play. That's generally not how breakouts work. So I would like to see a pullback, maybe 11, like maybe 12,000 or 11,950. I would prefer a deeper pullback to say 10,3, 10,4, 10,5. That to me would be a much more favorable place to get long because I think the medium-term base in Bitcoin is building for more of a rally. And I think if it were to pull back here and then launch higher and then break out, then I think there's a good chance that this would hold as support on pullbacks, which would mean that the base is now higher, which would create more opportunities for a higher challenge of Bitcoin, potential move to 16.2 and all the way back to the prior highs at high 19s. So I am pretty favorable on Bitcoin structurally, technically. And with those three scenarios playing themselves out, I think that could also be very good. So very good question. Okay. Next question. Drazen says, thank you on Apple. You're welcome. Yasin Amar, which scenario is good for the DAX? Okay, let's go to That's a little bit trickier situation. Partially because I don't have as much information. I don't know if there's a particular situation regarding the US election that would have like a direct impact on the DAX. I don't really see how that would play itself out. There's not a whole lot going on between Germany and the US right now. So because there's no, geopolitical situation going on, there's not a whole lot of issues in terms of trade or any sort of bilateral agreements or anything like that. I don't see many scenarios regarding this specific US election that's going to have major impacts upon the DAX. I think the way you should be looking at the DAX is what's going on with the coronavirus in Europe, which if you're in Europe, you have a much better situation than I do. I don't live in Europe. I live in the US. I have been watching cases in there. They seem to be rising very intensely. Some countries are having some, actually worse situations or very bad situations with coronavirus cases, hitting new all-time highs or close to that. So I think the situations you'd want to watch out for in terms of the DAX would be what's happening with coronavirus in Europe and, how are things going with the Brexit situation. Those I think are going to be your two most important situations. But I don't think there's anything specific about or any sort of direct link with the US election on how it's going to impact the DAX directly. I think if we see a lot of indices fall because of the situation in the US, it's going to affect pretty much everybody across the board. I don't think it's going to be great for a few indices and most of them are off. I think a lot of indices will struggle, including the DAX, but I don't see kind of this direct link in this situation. So watch coronavirus and watch the Brexit for the DAX situation. So hopefully I answer your question. Peter saying, thanks for the Bitcoin scenario. You're welcome on that. Okay, so we've been going for about an hour now. So anybody have any last questions before we wrap this up? By the way, if you haven't already, smash the like button on this one here if you found this value. If I've given you some good trade information, if I've shown you some things technically that help advance your understanding of trading, if I've helped explain scenarios for you about potential trade opportunities that you found beneficial, my analysis of tech or of Apple or of Bitcoin or whatever it is, if that's helped you, hit the like button. I appreciate that. Not only does it tell me that you're valuing this material, but it also tells XTB that. It also tells YouTube that. So I'd appreciate it. XTB would appreciate it. If you don't want me to do webinars, fine. I don't have to do these. I make a ton of money trading. This is for you all. It's not for me. This is for XTB. It's for them, and it's for you all. So if you appreciate that, hit the like button. I could just trade for a living and be just fine. I don't have to do YouTube webinars. I do this for you all. I don't do this for my own personal benefit. So I appreciate that. So, okay. Any last questions before we wrap it up then? If there's not, we'll wrap it up. If you have some very specific questions about the US election, potential trade setups and things like that, then I'm happy to look at that. Otherwise, we will wrap this up. We'll give this just a few more. One thing I should cover. Okay, so who here trades the VIX? I trade the VIX. I'm pretty well positioned in VIX. And I can share with you exactly how I'm positioned in VIX right now, but I know XTB has VIX. So if you're trading with XTB, I'd recommend being very involved with that. So regarding VIX, volatility index, it's if you think volatility is going to rise, then being long VIX is a very, very good play. If you think that it's more likely there's going to be a contested election in the US and that will cause uncertainty, which would cause volatility to rise, VIX is going to benefit from not only a rise in volatility, but they're also going to benefit from all this uncertainty. And one of the biggest beneficiaries of uncertainty, whether it's you're a long S&P player, a long tech, or whatever it is for the VIX to rise in those situations. This is what the VIX did when the coronavirus hit. It just skyrocketed in a matter of weeks. And, if you were long VIX at that time, you made an absolute killing. So VIX, when people are long the S&P, they're long the NASDAQ, they feel that the market might be turning over, but they still want to stay long. They will often get protection. And one of the best ways to get protection is to either hedge the position directly or get long volatility. And you do that through the VIX. So they could either be taking long option plays on the VIX directly. That could be buying calls. That could be buying bull call spreads. There's a lot of different ways you could play the VIX if you think the VIX is going to rise. It could also be maybe they were already short the VIX, and so they want to buy protection towards that. And so there's a lot of different ways that, they could buy protection in terms of buying puts on the S&P 500 and the NASDAQ or whatever stocks they own. But generally, when people look at protection and they think the market's going to sell off and that there's going to be an increase in volatility, one of the biggest beneficiaries of that is the VIX. So we've been long VIX for a little bit now. We made some money on this particular move, but a few weeks back, we bought a bull call spread in the VIX. And so what that is basically, let me get the drawing tool out here. Do I have the annotation tool? I do not. That's a bummer. For some reason, I do not have the annotation tool. Okay. All right. So basically the way it works is that you can buy it with a bull call spread. You're buying a call, say, like here, and then you would sell a call at a higher price. So you sell a call here. And what you want is you want the market to rise above the first call and get towards the second call. Whatever it gets above this, I don't make any more profit. But if it gets above the first call and it covers the cost of that option that I bought, well, then everything above that is in profit. And we did that. We did a 30-35 bull call spread. So we bought the 30 call a couple weeks back and we sold the 35. So basically we're at pretty much max profit at this point. When we bought it for December 16th, which is when the monthly option expires. We did that specifically because we were leaning towards the more probable scenario is a contested election. And if it's a contested election, that could be for a week to a month. So we bought a bull call spread on the VIX for the December expiry. We've already reached that target ahead of time, so we make more money because it got there faster. But we felt like volatility was going to rise pre-election and that there's more likely to be a contested scenario, and that would benefit VIX. What we've also done is sold a February put call or a bear put spread, which basically means that we want the market to fall. So we think volatility is going to rise through December, which would put us getting a vertical line here. Let's go. There we go. So we think sometime in December, maybe I can make this a different color. There we go. So we think volatility is going to rise. We already were right on that. We bought it 2 weeks ago. We think it's going to rise at least for the first few weeks or the first week of the election. And then we think by sometime mid-December, we are speculating that the election will be decided in the US and that once that election is decided, there'll be a little bit more stability because we'll have a better idea of where things are going to be at that point, who's in control of the Senate, the House, the presidency, and all that. And I think volatility is going to fall at that point. So to give us a little bit of space on that, we bought the February bear put spread. And so we're expecting the VIX to fall back down by then. And so if it does, great for us. If the sooner it does it, the better. But we bought, I think we bought the 21 and we sold the 17. So if you look at that, basically what we're thinking is that we're going to see a massive drop in the VIX. And that's going to be, so we want the market to be below 21 by February. And we think it's going to go down. We're going to see a massive drop in volatility to the 17th. So it's not as big a profit opportunity, but that's what we're going to think. So we're thinking the market's going to go up in terms of VIX and then it's going to go down. You can play the VIX directly or you can play options on that. I like options because they give me a fixed risk. But if I didn't have access to options, then I would trade directly the VIX. So I think there's going to be a lot of great trade opportunities in the VIX. I think it's going to be one of the better instruments out there. So we did get a couple more questions here. So let's take a look at that. Okay. So Neil Ajwani, how do you see the recent moves in bonds? Any particular bonds you want to look at? We talked about what we think is the most beneficial scenario for bonds. And where's our bond play? That is, we like being long bonds if Trump wins re-election and the Republicans keep control of the Senate. If that happens, then it will allow the Republicans to not only pass relief packages, but also new legislature. So I think at that point, it would be very, very good for bonds. That I think is the best scenario for bonds. The other situations I don't think are good scenarios for bonds. So that's my analysis on that one. Okay. Any last questions before we wrap it up? I think we'll cover that. Drazen saying very informative. Thank you very much. You're welcome, Drazen. And Yasin Amar saying thanks a lot. I appreciate that. Okay, it doesn't look like we have any more questions. All right, so with that being said, if you'd like to learn more about what we do, you can check us out at our YouTube channel here, Second Skies Trading, and you can check out our website, secondskieshereforex.com. We have a live trade room for our members of the stock trading course. So they get to see access to my day trades, my swing trades every Monday through Thursday. We do webinars on Fridays. So it's a chance for them to kind of answer questions, go over trade ideas, look at what I'm looking at going forward, trades I did for the week, what I'm looking at next week, and so forth. If you'd like to become a member, check us out. Other than that, check out, we have a ton of free content on our YouTube channel and a ton of free content on our website. We do live videos every Tuesday for the US Market Open. And then on Fridays, we publish a top trade review video. We'll be a lot more active in YouTube after the election come next year because I'm moving to a new office. And other than that, I want to say thanks to XTB on this. It's been a great brokerage to work with. I'm in the US, and so legally they can't have me as a client. But if I was in the EU or the US, I'd be with XTB. Part of it is because I think they have one of the best platforms in the world right now, which is the XStation 5. One of the most user-friendly platforms, and it has a lot of features in it that the majority, like most of the platforms, do not have. The execution's great on it. They have probably one of the widest array of instruments out there, and their portfolio of instruments is expanding, which to me is a really good sign. To me, the brokerages that are expanding the number of instruments, particularly the ones that are moving into stocks, which they've been doing, I think those are the brokers that are going to be the best positioned for the future, and they're doing that. And so, the ones that are consolidating their performance, I think it's a bad idea. I think traders need to be more multi-asset class. I don't think it's good enough to just be an FX trader. I think you need to be trading multiple asset classes right now. And so they have that. They have something like 2,000 US stocks. They have something like tens of thousands of stocks through all their European countries. So they have a lot of access to different markets. It's awesome that they have that. And so I really like them as a brokerage and where they're not just what they have now, but where they're going. I think they're probably positioned to be one of the strongest European brokerages in the future. So if I was in the EU or UK, I would be trading through them, assuming they can get options for me. So super, super important. But with that being said, I hope you all enjoyed this here. I look forward to hearing from you. Thank you to XTB on this one here. Andreas Olson, thank you. You're welcome as well. I hope you enjoyed the seminar. Other than that, good luck trading tomorrow. Good luck with the election. I hope you feel like you have a better understanding of how to trade it going forward. And I will see you guys next time. Take care, everyone.